Hi, good evening. Assalamu alaikum. Today, our third session. Hope my screen is, you can see my screen? Just confirm, please. Okay, today, our third session. Today date is 22nd January 2025. And hope the previous slide you go through at home or office or wherever the possible. I request you guys to go through the relevant topic and whatever the city law or cabinet decision or ministerial decision we are referring. So please go and read that relevant clause as well. Let's begin today's session. Today, we're going to discuss the revenue. So in terms of the revenue, we have to understand. So while preparing the financial statement and the compliance, so what are the now here we rules and understanding we are considering from the corporate tax point of view. So today our main topic is the small business relief and what are the benefits and how we can avail the small business relief. So let's start the first in terms of the revenue. To prepare the financial statement or to avail the any kind of relief or any tax related calculation, we have to go as per the IFRS. We have to prepare the financial statement as per IFRS. So now today, if our revenue is less than 3 million, so the first rule for understanding, we are mentioning the rule number 1 and rule number 2 in that format for our understanding. So first rule that option that we have that we can use the cash basis accounting. In previous session, we already discussed the cash basis and the accrual basis. So now considering the small business relief perspective, so if our revenue is less than 3 million or equal to 3 million, so we can avail the small business relief, and this is available till 31st December 2026, whatever the accounting period or tax period coming up to 31st December 2026. And the second, we will understand what are the additional application. The small business relief in the important part is the tax period. Means the in current year and the previous year also it will be less than 3 million. So here the one is the very common misunderstanding where we are discussing, okay, the company have this year, let's say that your first tax period is the 2023. Let me just take the laser pointer. So if the company first tax period is 2024, January to December, so his revenue is less than 3 million. So here, but here we are mentioning the less than 3 million in current tax period plus the previous tax period. So what is the misunderstanding or the ambiguity that people doing while calculating the revenue calculation for the small business relief? They think, okay, in 2023, our revenue is at 10 million, but this in 2024 is at 2.5 million. So we cannot avail because the previous period we have more than 3 million. But here we have to understand and they focus on that. They mention the current tax period plus previous tax period. So corporate tax effective is the 1st June 2023. So whatever the first tax period after the corporate tax effective date, you have to count from that. So maybe based on the your tax period or accounting period, if June to May or July to June, so you have to consider from that onward. And commonly the companies have the tax period is January to December. The mostly are the in the term of the statistic, we can give any random figure 70%, 60%, but there is no hard and fast rule. But just for understanding, we are saying if the January to December is your first tax period, so after the effective date of the corporate tax, your first tax period will be 2024. So if your revenue is less than 3 million, you can avail the small business relief. So there is no previous tax period because this is your first tax period. We will go with example also for this understanding, but I just want to highlight this point on this stage as well. So now the next point is coming. The small business relief is available to resident and non-resident both. This is another interesting point, and the very common mistake here also people do. The small business relief is to the resident and non-resident. So here we have to understand, one is a natural person, one is a juridical person. So in terms of juridical person, resident only can avail the small business relief. So here the next we are seeing juridical person. This person, resident can will get a small business relief. Non-resident will not get the small business relief. But in terms of the natural person, yes, it is available for both resident and non-resident. But in terms of juridical person, only available to natural person, who will go to another side. So then we'll witness that part also. Juridical person, we already knows the LLC company, PTSA company, LLP company. We discussed all the type in the previous session. So if in terms of the small business relief, another important point, because mostly there is a confusion, okay, in what under natural person relief, we don't have to go for the city registration. But in the small SBR, small business relief, we commonly known with the term of SBR. SBR, yes, you have to go for the city registration, you have to submit the city return, you have, but there is no tax. And this is the time period till 31st December 2026, the deadline where you avail this relief. Let's move to the next point now. Now the another part, from the here we, as earlier mentioned, from the tax point of view, we have to consider the revenue and his condition. So while considering that criteria, so we seen less than 3 million, what are the benefits are available, or what are the relief is available, or what are the applicable regulation. So earlier we discussed in terms of the less than 3 million, we can we have the option, we can go for the cash basis, we can this option is optional, but we can go for accrual basis also. In previous session we have the detailed discussion, but we can avail the small business relief also. Let's go and now if our revenue is greater than 50 million, so what will be the impact, or what are the conditions that we have to see? So if revenue is exceeding, so rule number 1, we have to follow full IFRS. Rule number 2, we require the audited financial statement. Versus if revenue is less than 3 million, mainland company, they don't require the financial statement, audited financial statement. But still they have to prepare the financial statement as per the IFRS for SME. Still the revenue calculation will be as per IFRS based on SME, where you have to test, okay, you are meeting the 3 million condition or not. So let's move to the next point. If our revenue is greater than 50 million, we have to follow the full IFRS. We need to prepare the audited financial statement. Now, if our revenue is less than 50 million, so what are the optional and the mandatory from the tax point of view? Now here we discuss less than 3 million, but here we are discussing less than 50 million. So which means, so here the we wish to understand if revenue is more than 3 million and less than 50 million. So what are the optional or mandatory compliance? If revenue is less than 50 million, so audit requirement is optional, not mandatory. Audited financial statement, if revenue is less than 50 million, here we are talking about the AED currency. Just I'm reminding again, here the criteria is a 50 million AED, UAE dirham. If revenue less than 50 million, the audited financial statement is optional. You can prepare, or you can just prepare your financial statement as per IFRS SME, and it's not mandatory. So, but even the revenue, the less than 50 million, the audited financial statement is mandatory for whom? Qualified free zone person. The financial statement is a mandatory. So on the same point, we are checking in one point, the audited financial statement is optional. But on the other side, if we are going to the qualifying free zone, the audited financial statement is mandatory regardless the revenue condition. But here the most important point, the qualifying free zone person. Let's move to the next. Okay, the less than 50 million or greater than 15 million in both scenario is a mandatory. So regional corporate tax, we have to register for corporate tax. We have to prepare the return and pay the corporate tax. Let's move to the next point. Yeah, today our part number 8. So let's start from the part number 8, natural person relief. So earlier we have understand the revenue condition. Based on the revenue, what are the mandatory and what are the optional things that we have to do as per the from the corporate tax point of view. Now the part number 8 is representing the natural person relief. We still have to go further and discuss the small business relief also. Resident and non-resident and small business relief. Now the first point is natural person relief. The first point, we have to understand the corporate tax we are paying on the profit, not on revenue. Corporate tax we are paying on the revenue, not on the profit. So what is the profit? Income minus expenses is our profit. Revenue ordinary activities, here the important part we have to understand while doing the revenue calculation, we might do some mistake or some error. We have to refine our understanding what is the revenue. In terms of the corporate tax, the revenue, ordinary activity, main activity, core activity, because they say as per the tax, they're referring the what are the regular activities from where you are generating the business income. Maybe any one-off activity you perform and you have some income, but that may be not your regular activity, or maybe your core activity, that is the only one-off that may not fall under business income. So this, from this point of view, we have to understand the revenue criteria and the understanding for calculation of which part will be calculated as a revenue. And the second part, the mentioning the main activities, core activities. Normally we see in the financial statement, we have the other income. So other income is not our main revenue. So while calculating the revenue threshold, or wherever we need to calculate the revenue threshold, we will not calculate the other income as part of the revenue. The important part here, we are saying ordinary activity, the regular activity from where we are generating the business income, main activities, core activities. One-off activity may not fall under the revenue criteria. So here we have to see as per the IFRS 15, the latest, the accounting standard. So the control, goods, services, transfer process. So we mostly familiar being a professional, what is the IFRS 15 and what is the recognition criteria of the revenue. So as per UAE law, we have to do all the financial statement preparation or calculation as per the applicable IFRS. Either is a IFRS SME or full based on the revenue condition that we already discussed. So now other income, as just now we mentioned, the other income may not calculate under revenue while calculating the threshold. We will see one example also in this regard. Now the next point, we are going to see the natural person relief. So natural person relief, if the revenue is less than 1 million. Here the important part we have to understand, the revenue is less than 1 million. But revenue for less than 1 million, all the business income that the natural person have, that the natural person generates during the one Gregorian calendar year. So this is the important part we have to understand. If it's a natural person, revenue is less than 1 million from all the business activity that what he performed. Now, mostly we will get, okay, natural person through trade license or without trade license, through sole establishment or without establishment. that we already have the detailed understanding on that. In the previous two sessions, we understand that part also. But again, here I want to again clarify the revenue. If the natural person he have 2 or 5 or 10 sole establishment, so he have to consolidate the revenue of all the sole establishment, or even he doing some activity that is do not have the trade license, but is required to have the trade license. That also will be part of the calculation when we are calculating the revenue threshold. So this is the very important part. If after having the all the consolidated revenue is less than 1 million, yes, we can opt for the natural person relief. If we are opting for the natural person relief, so the city registration is not required, city return is not required, city payment is not required, and the deadline is the 31st December 2026. We can avail the natural person relief. Here earlier I mentioned natural person relief is available to both resident and non-resident. This is the another point we have to understand. Even the person is a non-resident, he's not living in UAE, he's living abroad. He have the business income from UAE. If he have the business income from UAE, still he can take the natural person relief. This is the important part. Natural. Let's move to the. Here we already discussed city registration, return, payment not required or not applicable, as you can claim the natural person relief. But while claiming natural person relief, you have to keep all the documentation for all the sole establishment or all the business income that the natural person have. So in the future, the when you go for the registration for the corporate tax after the 31st December 2026, the FTM may require the supporting information, because if you are already preparing the VAT return under the sole establishment, you have to consider how much the revenue you are declaring over there. So you can have to consider such thing also while doing the revenue condition. And mostly the very common, the previously people and for natural person, they registered only under one company and submitting all the sole establishment VAT return under one company. As per the VAT compliance, we have to register the natural person for the VAT as a taxable person. But in certain cases, people registered the sole establishment also. So under one sole establishment, they upload all other trade license. Now they are submitting the VAT return under the same TR number. And that VAT topic is just for understanding. We are highlighting here. Let's move to the next point, the natural person. The natural person, if the revenue is less than 1 million, so what is his tax period? Tax period is a Gregorian calendar year. For natural person, we already understand the tax period will remain the Gregorian calendar year, that is January to December. As earlier, ambiguity or confusion in regarding a small business relief. Like people saying the small business relief is not available to natural person. Because what is the ambiguity? They think the natural person, they can opt only the natural person relief. They cannot take the SPR. But practically, as per the city law, yes, he can avail the small business relief also. Natural person, if the revenue is less than 3 million, he can opt for the natural person relief. But here my suggestion is that if you are not sure your revenue is falling under 1 million or is exceeding 1 million due to certain limitation, so it's better to register for the corporate tax and claim the small business relief, because up to 3 million you have the small business relief. But if you are sure, then you can opt for the small business natural person relief, because in terms of natural person relief, you don't have to register for city, and if you not register, you will not submit the return, or you will not pay the city. But even your revenue is from 1 to 3 million, so you still can take the benefit of the small business relief. In that case, you have to only apply for the city registration. You have to submit the city return also. But small business relief return will be a simple return. It will not be the full return where you have to prepare all the supporting document. It's only maybe the two-step if you opt for the small business relief, so whole return will be closed. And this you can file within maybe the 5 minutes or less than 5 minutes. But the submission of return is not the critical for the small business relief. But the important part, we have to learn that the small business relief, the calculation, the revenue calculation, we must know the revenue calculation. If we do the mistake in the revenue calculation, so the return will be go wrong. Is there any point that wish to understand, or you have any question? Please, I'm looking to the chat. Just send me the message. I'm assuming everything is going fine. Let's continue. Now, if the revenue is exceeding the 3 million, no relief. We're seeing the revenue is less than 1 million, the natural person relief. If the revenue is less than 1 million is a natural person relief, 1 to 3 million is the SBR, is available to a juridical person as well as to the natural person also, but is not available to branch or the foreign non-resident person. SBR is not available to non-resident person. Revenue is greater than 3 million, no relief is available. Just for general understanding, general information as a key understanding point, all the threshold rules applicable to check the relief eligibility based on the revenue, not on the profit. Because mostly we are even the corporate tax calculation are the 9% or 0% threshold we applying on the taxable income, are simply understanding on the profit. But to see the criteria to get the natural person relief, we are mentioning the revenue, not the profit, not the taxable income. Only a few points, that is maybe one of them where we have to check the threshold for the relief or the corporate tax compliance purpose, the revenue. This is the one of them in terms of the natural person or in terms of the SBR or in terms of the audited financial statement. We are checking the threshold. These are the main key points. The tax liability calculated on the profit, not on the revenue. Here, another point, net revenue threshold for the revenue is excluding other income. Here we discuss if we are calculating the threshold, so we have to see the revenue, net revenue, which means if the company have the main product is the making some shoes. So his main activity is making shoes, preparing shoes. So if he starts selling the any other item like the milk, so that is the only one of the activity or subsidiary random activity, so that will be not his revenue. The most relevant example, if normally we seen our in each industry, if the main activity we are performing, so apart from that there is some scrap or some byproduct that we are coming out of that, but still that byproduct is not the major part. So then that we call the other income, because that is not our business. Our business will remain the main activity. So we have to calculate based on the net revenue. Why we are saying the revenue? Because we have to calculate based on the IFRS 15. The FTA, they mentioned, given the reference for the applicable IFRS. So while calculating the revenue, you have to see the guideline of the IFRS. So what is the relevant standard for the revenue is 15. What is the 15 is mentioning the control of goods and services is transfer or process or record. And there is a detailed criteria. So mostly we know, sorry, that we will not discuss in this, but hope we are familiar with the revenue calculation as per IFRS 15. Let's move to the next point. If the revenue is less than 1 million in a calendar year, again, the natural person relief we mentioned if less than 1 million in a calendar year. So this is a Gregorian calendar year, that is Jan to December. Here's some information point with the name of I. We are putting just for our understanding and repeating, because on each session we are keep repeating such things for our reminder purpose. Natural person, both resident and non-resident, doing business activity, not through trade license, or having the revenue is a 1 million or no. Again, the same point we summarize. If the revenue is less than 1 million, is not through trade license, are not required trade license. If is not through trade license, are not required to have the trade license in the term of and the revenue is less than 1 million. No need to go for a city registration, that we already understand. So let's move to the next point. Here I add the link. It is audited financial statement. So this is the one of the important point, and to explain one of the concept, we have to see this, but I believe you can search on the Google and see the audited financial statement, and the relevant page for audited financial statement where is shown the income statement or the profit and loss statement. So I appreciate if you guys go through that part, only the front page, but this will be the comprehensive report. You have to scroll down and see the relevant page. Let me open this. I'm just showing this point for our better understanding, and I'll try to send later on in the group also the audited financial statement. So it's complete comprehensive report. So you, if we wish to read, we can read also. But the important point that I want to show, that is the income statement. Yeah, it would be. So what is the important point for our understanding? Mostly we are familiar the statement of profit and loss. Statement of profit and loss. We are mostly familiar with this. But how about the other comprehensive income? The point we need to understand the other comprehensive income. Here the shown the other comprehensive income. This is the part. This is the part other comprehensive income. So here below listed some items, some line items. Why this is important? All these items, why these are the important? Normally we do our corporate tax calculation from profit before tax. This is the point. But if we have to do a couple of adjustment, that may be already as per the accounting, we already deducted. Okay. Let's not visible. Okay, sorry guys, now hope you can see the screen. Hope now you're able to see the ET's last consolidated statement. Okay. The point here I'm explaining, normally we are familiar with this statement of profit and loss. That is very common in the small industry. They normally don't have the other comprehensive income, the line item. So that's why maybe we not seen. The financial statement component, mostly maybe we are familiar is the 5 part of the financial statement, component of the financial statement are 5. income statement, balance sheet, cash flow, statement of change in equity, cash notes to the accounts. So these are the commonly we knows. But the other comprehensive income is also part of the financial statement. Some companies they prepare as a six statement, some they prepare as a five, because the IFRS allow us to combine the other comprehensive income along with the profit and loss. Okay, this one is not the PPT. I opened the online, but I'm going back to the PPT. I'll do one thing. I hope you guys can see the screen now. To explain the part, just okay, guys. We are discussing for our understanding purpose. So I'll just start from here again. So I was explaining the ET Salat for audited financial statement, and you might go the EMAR consolidated financial statement also. You can go and search. But let's move to the, I already took the screenshot on the next page. So let's see what are the important points that we have to see over here. The normally we are familiar the statement of profit and loss. In statement of profit and loss, the normally the profit before tax, we take for the calculation of the corporate tax, calculate the taxable income. Sure, the link will be shared for the same, but just focus on that, and even you search with the same, it will come to you also. But let's focus over there. Later on, we will share the link as well. Here we have to see the other comprehensive income. But then financial statement, I just appreciate you guys if you send me in the chat how many component of the financial statement. Normally we see in the audited report of the companies wherever we are working are the clients. So I just appreciate if you drop in chat the message, how many component of the financial statement. Just quickly is a small exercise. Just mention the name also. Just mention the name also, because the important part that you have to understand. So which five you are familiar? Which five you are familiar? The one component you are missing. As I appreciate if you can specify what are the five. Yes, one of the OCI is a sixth component. It's not the fifth component. OCI, other statement, other comprehensive income is the fifth component, is not the, is the sixth component. So as per IFRS, this is the sixth component. Some company, why I'm saying the sixth, because normally is the five component. Mostly people mention the profit and loss, balance sheet, cash flow, equity, and state notes to accounts. But we normally not seen the other comprehensive income. So IFRS allow us to make the combined report, the statement of profit and loss and the other comprehensive income. Here we seen the separate, and here we seeing the other comprehensive income. So they will not make the separate, but you can make the separate also. So why this is important? Why this is important? Because these line item, it will make the effect. It will make the effect on your tax preparation. Corporate tax liability calculation, it will affect. How it will affect? How it will affect? Because the important part, I already make one detailed session, 2-hour session on this. that is available on the Protex e-learning YouTube channel. So you may go and search unrealized gain and unrealized gain, losses and gain. So if you go through, so you will understand what are the point I'm trying to explain over here, because that is the one complete session and very detailed session for understanding. So now you will understand, you in the return we have to opt for the election. The election, there is a couple of election, we have to understand the basis of the election. So today I will not go in detailed discussion, but I highlighted the point. If you go and watch on the YouTube, this I'll share the link again in the group also. So this point will be get clear from there. But you have to spend the time, invest your time, and understand why this other comprehensive income is important during the calculation of the corporate tax, taxable income, and making the adjustment. Let's move to the next point. Before moving to the next point, so today I'll just share one quiz that will be considered as our attendance also, and for your learning point of view also. So guys, quickly take 5 minutes and try to complete this quiz. Normally in this quiz, I'm trying to add the one or two lengthy question also that may take more time. But even you're not able to understand, but later on after the session, you go back and work on that and understand. We are reading the topic, but maybe that topic is not covered, but that quiz will give you the understanding so far. In future, the topic will be covered. But the important part, you have to know what is the concept, why we are going through this exercise. Because in future, we have to see such scenarios where we have to apply the tax regulation. Please quickly. Mr. Sharik Noor, thank you. You all write the complete text regarding the component of financial statement. I appreciate for your dedication and spending the time and investing the time. Other people also write, but you type the complete words of the statement of profit and loss and the statement of financial position. So keep active in the session and focus on the key points. And later on, we will go example by example on these areas. So far, any participant completed the exercise, just please send the message in the chat. Well, just for your information, if anyone from your circle or is known to you guys, if he's preparing the PwC exam test for the TOLI, ATTI, if you need any support, I can help on that also. Specifically, I'm on in the first 2 week of the Feb. I have one specific participant where they are preparing. So for the exam, so these 2 weeks will be dedicated for those participants or those candidates to prepare them for the exam. I'm not saying I'm offering the PwC services. I'm just saying they already took the session, but the challenge is that during the work life is difficult to continue along with the session also. But later on, once you stand alone, sit and prepare, it will be difficult to recall all the things or the do the exam preparation. So in that regard, if anybody needs the support, I can support those participants also. Okay, now most of the participants saying yes is already done. Now the tax period for the natural person, Gregorian calendar year that we already knows that Gregorian calendar year is the January to December. So 12-month period, the first filing period will be 9 months after the year end, that is 30th September. Natural person will always have a tax period following the Gregorian calendar year. The first tax period for natural person will be will be 1st January 24 to 31st January 2024. 1st January 24, 31st December, January 2024. So this will be the first tax period. We already understand this point, but again, as part of the process, we are explaining this. Let's move to the next. Relief for individual cabinet decision. Natural person, we already understand, but again, now we are summarizing in a different way. Natural person relief, both resident and non-resident UE, doing business or business activity through a trade license or require a trade license. That you have to understand the difference. Doing a business or business activity. These words have the broader definition. Doing a business or business activity in a UE through a trade license. They already taken the trade license or require a trade license. Maybe that activity, as per the local regulation, you need to have the trade license, but you do not have. So that doesn't mean you are coming, you will go out of scope. Even some where the tax regulation is saying you are doing the business where you do not require the trade license, that will be go out of scope. But it's not mandatory. If the activity is required to have the trade license, even you do not have, you will be the scope of the corporate tax. Now we are saying through a trade license, a required trade license, yes. Okay, if the revenue is greater than 1 million Gregorian calendar year, not a tax period. Now, first we understand natural person doing the business or business activity through a trade license or require a trade license. Yes. Now we are saying the revenue is greater than 1 million in a Gregorian calendar year, Gregorian calendar year, not a tax period. Because the Gregorian calendar year itself is a tax period for the natural person. There is no other tax period. The definition we already understand. Now we are saying if the revenue is greater than 1 million, yes, taxable person required to register for city. And if revenue is less than 3 million, he can avail the small business relief. We already understand the same concept. Now we are summarized in for better understanding. Now, if the revenue is greater than 1 million, no. Here we're saying the revenue greater than 1 million, yes, he have to go for city and register and pay the prepare the return, but he can opt for the SPR. If the revenue is less than 3 million, no need to go for the city registration. Now the next part, if he's first we said he is doing the business and the business activity through the trade license or required trade license, yes. Now he's saying no. If he's not doing the business, if he's not doing the business or business activity through a trade license or required trade license, okay, the gross revenue less than and more than 1 million does not require to register for city. So you know what is the point over here is mentioning. There is a real estate, because three exemption, the three benefits to the natural person is available. One is the wages and salaries. There is no corporate tax on that. There is a personal investment and the real estate. Real estate, if he's doing without trade license, and if he's doing whatever the income, whatever the revenue, million, trillion, so that will not fall under the corporate tax threshold or the compliance. Now the next point, doing the business activity through a separate legal entity. The important point we have to understand the separate legal, the word legal entity, LLC, juridical person. If it is yes, required to register for the city and pay the city. If no, so if it's doing business through a separate legal entity, he have to apply. If it is not doing, then there's no same. We will go back on the condition. If you do not have any separate legal entity, so he will be considered under the natural person relief and other condition. Let's move to the next. Now, not a business or business activity. The same point I'm mentioning before. He is not doing business or business activity. The point here we are mentioning, less than 1 million, more than 1 million does not require, because we are saying he's this no. Okay, now this no, how to read this? Natural person, both resident and non-resident, not doing business or business activity in a UAE through a trade license or require a trade license. This is the point where we are understanding. If a person is working as an employee in an organization on a contract basis or any form of the employment, do he need the trade license? Or he don't need the trade license? The personal investment, if he made the investment in shares, okay, natural person buy the shares of any stock exchange. So do he need to have the trade license? No. The next point, the real estate investment. The real estate investment, just now we understand, is not doing through the trade license or require the trade license, because the natural person, he can have the property on his own name. Even he have the multiple properties on his own name, but he do not have the trade license. He's having the rental income. If he have the rental income, but the property through those are under his personal name. We already seen the example in the last session in this regard, that will not fall under the corporate tax. But when the property will come under the juridical person, under the real estate LLC company, yes, then it will be subject to corporate tax. So now the SBR revenue in the current and the previous tax period should not exceed 3 million. This is the, again, I'm summarizing this point. Hope you guys understand that the word is used the tax period, not the accounting period. The important point we have to understand, the current and previous tax period. Maybe this is your first tax period is less than 3 million. And second tax period, again, less than 1 million. In the third tax period, even is exceeding 3 million. So then you have to go for the corporate tax return preparation and pay the city liability. Now the natural person relief, current Gregorian calendar year should not exceed the 1 million. Let's move to our next point, relief for individual ministerial decision link is there. So if the way same is written over there, you just go and type on the Google and it will be open over there. But I'll share the link also. Here again, I'm summarizing the relief for natural person. The same point I'm explaining in different way, multiple way for your better understanding, for repetition, for your, because if you have the, your understanding is not clear, so the application of such thing will not be appropriate. Relief for natural person, the cabinet decision is, ministerial decision 49 of 2023. Based on that, the relief for individual. Resident, non-resident person doing business activity. Now, the important point, earlier also we explained, doing business activity independently, ongoing, conduct regularly. Okay. The main activity, the regular activity, if this is the thing, so this we will consider as a business activity. Next, the revenue. If the revenue is a less than 1 million, if the revenue is a less than 1 million. So this is the point I want to explain. The revenue is less than 1 million. No need to register for city. No need to calculate the taxable income for the city. I'm just going back. Okay. If the revenue less than 1 million, no need to register for city and no need to calculate the taxable income for city purpose. Now the next point, relief is not available. Now again the natural person relief, there is some limitation. We have to understand the limitation. If you are part of the qualified free zone, if you are part of M&E, M&E means the consolidated revenue greater than AED 3.15 billion dirham. And you are operating in any location. The next point, if not business activity. Just now in the previous slide, we understand wages and salary, personal investment, real estate investment income. Not through a trade license or the required trade license. Let's move to our next point today. Part number 9. So here's our point, the small business relief. For the earlier we discussed the natural person relief. So hope the natural person relief understanding is clear, and what is the limitation that also clear. Just quickly to send the message in the chat. Guys, are you active? Just send the quickly message. Natural person relief is clear. If you have any question, please mention over there quickly. Okay, let's move to the next, the small business relief. Small business relief will go through the overview, condition, revenue calculation, and summary. Let's start for that. So what is a small business relief? First, we have to understand the small business relief. Already we discussed some of the condition, but still we go in detail because still the application of these are the basic foundation. We are preparing our base. Once our base is prepared and we understand the complete framework of the corporate tax and the relevant terms and the relevant area of each, then we will dive into the detail and we will go further on the corporate tax calculation as well. But we'll understand this topic before that. Who is not eligible for small business relief? Member of M&E, qualifying free zone person, artificial person. Member of M&E, we already seen if your revenue is a 3.15 billion AED, if the consolidated revenue is more than that, then you will be considered part of a M&E. And qualified free zone, if you are part of qualified free zone, then you will be zero rated, subject to other condition. Or the artificial separation. What is the artificial separation? The mostly in M&E multinational entities, multinational enterprise, even with yes, multinational entity. Okay, the artificial separation. The artificial separation, if the one person have the company and the company is revenue is, let's say, is exceeding the 10 million. So what he will do? He will, if you are going to make the four companies just to avoid the corporate tax and to avail the SBR. This is very common. Being a human, we thought, okay, let's split into that, because instead of paying the 9%, if we split into the 3 or 4 units and having the four trade lessons, maybe the cost analysis, we do the cost analysis, having the four trade lessons, the cost will not be more in comparatively if we have pay the 9% corporate tax. So being a human, we do that, but if this is called the artificial separation, because the nature of business remains same, but you split into the multiple trade licenses or multiple organization. This is fall under the GAR rule. GAR rule is a anti-avoidance rule, where the people avoid the taxation through the such arrangement. The FTA, they might do the investigation and consider on the GAR rule. So there is a further compliance for the terms and conditions. Okay. Eligibility condition for SBR relief. Restriction to the tax period ending, that we already knows. What is it? Resident person, we already seen. Natural person, what are the income for the natural person? That is not will be calculation of the the revenue, that is wages, personal investment income, real estate investment income. Then we already familiar the term with the juridical person. What is juridical person? LLC, PSC. Then the permanent establishment, the PE. Normally, the word commonly we heard that are seen that PE, permanent establishment of non-resident person, double tax treaty. The small business relief is not available for the permanent establishment or the non-resident person, but still, if in the double tax treaty agreement is mentioned the such relief or the such benefit to be given, so then they can avail this benefit, because the double treaty agreement is more than 170 countries so far. The UE or FTA already made 170 countries. So double tax treaty. So the double tax treaty agreement will be supersede the city law or all the ministerial decision, cabinet decision. Double tax treaty agreement will supersede. So normally in terms of the PE branch or any other operation that is part of the worldwide, so they have the presence in the UE. So we have to see the the applicable double tax treaty agreement also. Anyhow, the UE source income, foreign income, accounting standard, we already familiar about accounting standard and revenue calculation. We discussed today also implication for resident person that are VAT registered. Anyhow, let's dive into that. Small business relief, 8th May 2023, ministerial decision 73. In terms of the natural person, ministerial decision was 49, and this is the 73. Now here we again understanding the small business relief not available to qualified free zone person and MNE, multinational entity. In the last session, we seen in the tax return, they have the specific one question or the one point they will ask, are you part of the MNE? Are you part of MNE? If you say yes, then they will ask add the revenue. Maybe I'll show you again today the MNE. If you say no, then you can move proceed further with the normal tax return calculation. Encourage investment. Why the UE authority, the UE government, they are promoting the small business relief. They want to encourage investment and support the small business. So now the people might say, okay, the small business relief, they are referring to the 3 million and the how much investment they will take over there. See, the small business relief, normally each country, they have ecosystem. Because the big operation or big entities are there, but associated small business with that industry will be there in the country. That is called the ecosystem. If we are using some mobiles, laptops, or any kind of that, but on the same time, some repair shop will be there. Many repair shop, they will offer these services. So that will be part of ecosystem. If you take any one of the brand from the China that is not available in UAE, but if the distribution person, he have the distribution in UAE and he's not giving you the outlet for the service for the repair, you will not find in the market the the parts. If any small part, any small charging pin or anything is get damaged, your whole product will be wasted. What does that mean? If you take the market products or the item who's already in the market, known to in the market, even the Chinese brand, but is known to the market, you will find the ecosystem available. Mostly the mobile shop or the relevant, they will keep their accessories, they will keep their spare part also. And even the repair shop will be available. Even the service, mostly such big brands, they have the some outlet where you can go and repair your product also. Just for understanding, I explained the concept of the ecosystem because each country, they must have the ecosystem to support the country big projects or big organization, because all the organization, they cannot do all the business, all the activities inside. So they will sublet small activities to such investors are the people who are in the market. Okay, now they want to support this small SME or the small investor by giving such kind of relief, okay, because normally their turnover maybe the 3 million, 2 million. So they don't want to put the burden on that. And even they are not having the financial means or the professional to afford one proper accountant also. They normally offload on the, the monthly one visit, two visit. So they normally go in that way also. So just to give them relief, so they consider in that. So now in the, if the person company have less than 3 million and he can opt for the SBR, so he don't have to prepare full return. So now what that mean? They reduce the compliance. They are not asking to prepare the full financial statement and submit with us. Then who will give you the relief? He's saying, okay, we trust on you. Later on in future, once you come, we will ask the detail what you did in the previous 3 years. Okay, so reduce the compliance. Requirement including the transfer pricing also. They will not ask the transfer pricing also. If revenue and the threshold in the current period and the previous tax period. Here the difference is if they did not mention the accounting period. Please we understand the accounting period and the tax period, the difference. Hope you understand the tax period, your first tax period when the corporate tax effective, that is the 1st June 2023 onward. Revenue calculated according to IFRS rules. Relief will be applied from 1st June, as I mentioned, the effective date until 31st June, until 31st December 2026, the last tax period. In case of small business relief, okay, if you have the small business relief, so now what will be the plus you will have? What are the relief you're gonna have? No need to calculate the taxable income for city purpose, as already mentioned. Just mention your revenue, the less than 3 million, or for the small business relief. So no need to calculate the taxable income. Compliance is reduced. Now, if you opt for the small business relief, so then what are the plus side? We already seen. What are the, we can say that disadvantage or that may affect in the future. You have to see the calculation or prepare yourself, take the analysis, what you are losing. Okay, if you opt for the small business relief, practically the bottom line will, you will say okay, it is the same thing, but just try to understand no relief for the exempt income. If you have the exempt income, you cannot claim the relief. Transfer of losses, if you have the losses, but you are already claiming the small business relief, you will not record the losses anywhere. Deductible expenses, what is deductible expenses? Wages and salaries. You cannot deduct as long as you are not preparing the corporate tax return. So you will not able to deduct net interest expense carry forward. Interest expense, now we have the interest option, we can carry forward up to 10 years. So we have that will not be available if you are opting for the small business relief. So again, here the important part, what is the important part? Again, still we have to do the analysis. If the entity is making the losses, if entity is having the losses in the first year, second year, third year, better not to go for this SPR. Because in that case, you will have the option to carry forward the net interest expenses, but subject each industry, what are the operation or what are the line item that you have it. Okay. So in that case, net interest expense can be carried forward, and interest expense we will go in the detail this standalone topic, but here we are this understanding purpose. Net interest expense we can carry forward up to 10 years, and the losses we can carry forward for the future years. But if you opt for the SBR, then you cannot claim in the future, because as long as the authorities will say, okay, you already opt for the small business relief, so you are not putting your organization or your business income under taxable calculation, so we will not consider the previous losses also. So now no need to prepare the TP document, transfer pricing. But the important part in terms of the SBR, we have to register for the city and submit the city return, but we will not pay the corporate tax. But in SBR relief, that is less than 1 million, if you are meeting the condition, then you don't have to register for the city itself. Let's move small business relief. We already seen. Now we moving towards the example for the practice and understand what we learned today and how we can apply small business relief in the context of the real estate. Just in the context of the real estate, we already seen eligible person can elect to be treated as not having any taxable income during the relief period. Yes, we already seen the one of the example for the real estate. Not obligate to calculate taxable income as long as you are claiming the SPR revenue less than 3 million. You don't have to calculate the taxable income. Taxable income means in accounting, first you have to calculate the accounting profit. From there, you have to calculate the taxable income. But from the revenue itself, we calculate, we claim the SPR, then we don't have to do this exercise. Simplified tax return and record keeping requirement. So there is no much requirement as compared where you prepare the full return. Not required to pay the corporate tax in respect of the period when the relief is available. Maybe you guys saying it's obvious if we are not submitting the return and preparing the financial or not preparing the taxable income, there will be no corporate tax payment also. See, most of the data is I taken from the FTA tax workshop. I taken from such example also from the FTA workshop. Now let's move to the where there is no specific exemption and the person is subject to corporate tax in respect of real estate activity, subject to condition. What we are saying, if where there is no specific exemption, if some activity is not falling exactly under one of the exemption, so then we are saying the person is subject to taxable in respect of the real estate activity. Considering that condition, okay, small business relief may be available. Specific exemption is not falling, but still subject to applicable conditions, small business relief may be available. Now here how we offer the small business relief. Small business relief is a part of election. Okay. So the part of election, how we can opt? We can opt in the return. Relief can be made at the first time of filing of the return. I will show you this exact question, window also that is appearing in the corporate tax return. Also, you have to just tick the SBR relief. Let's move to the next part. SBR relief condition. Who can elect? Let's see who can elect. As I mentioning, I already explained this part. Now it's just summarizing the point in a just for presentation purpose, but in terms of the technical or understanding purpose, we already seen this. A resident person, natural person, who can elect resident person, natural person, and the juridical person. Okay. Condition for election. We already seen less than 3 million in current and previous tax period. Available for tax period from period on and beginning after 1st June. Again is the repetition. Who cannot elect? Member of multinational groups with the consolidated revenue is a 3.15 billion. We already seen the person who artificially separate their business into more than one entity, leading to the revenue of each entity being below threshold for the small business relief. So as we already discussed, the artificial person, actually the business is same, but you are separated into 2 or 3 entities. And here, let's move to the next. Small business relief revenue calculation. How we calculate the revenue? Accounting standard for the revenue. We already seen the revenue is the gross amount of the income derived during a tax period calculated as per the applicable accounting standard. What is the applicable accounting standard? IFRS. Now, full IFRS or IFRS if less than 3 million, and if we are in mainland, we can go for the IFRS and revenue less than 3 million, we can adopt the cash basis. We don't have to go on accrual basis because here is another technical point. If you go on accrual basis, maybe you are exceeding the 3 million because accrual basis you are exceeding the 3 million. But same time, if you look into that on cash basis, because how much the cash you received, you made the sale, but you didn't receive the cash. So maybe you are less than 3 million. If you go on accrual basis, you may exceed 3 million. So again, the relief option you can catch over there. Business may use either accrual basis accounting or cash basis. This we already seen. This is the optional. Transfer pricing documentation not required. Revenue should be determined based on the arm length. Okay. Arm length is referring to the transfer pricing concept. Now the revenue includes which are the items that we should see while calculating the revenue threshold. Sale of goods and services by a business, sale of business asset. The same business who's selling goods and services, he have the plant machinery. We have the example for this. That will be part of the sale. Okay, then any exempt income such as dividend, even if you are having the dividend that we are saying is not taxable, but in terms of the revenue threshold, you have to calculate into that. Earlier, we many times we've seen the local dividend is not taxable, is exempt income. But to check the SBR eligibility, we have to calculate in the revenue. Market value of non-cash receipts, goods are received in terms of barter transaction. So we being a professional knows about the barter transaction. We did not make any payment and we didn't cash or the bank transfer. They have one plant, we need that plant and he need another product from us. So we took the plant and we give him the product. This is the exchange. Okay, revenue does not include. Here we are saying we have to include, and now we have to understand while calculating the SBR threshold, that is the revenue base. So which does not include into that threshold? VAT. VAT charged by business registered for VAT. Because normally VAT we are collecting and we are giving to the FTA. This is not our revenue. So revenue without VAT. This is the important part. The loan and advances received, that also not the revenue. If you receive the loan from any of the related party or any of the investor, or any customer, you receive the advances, that also not part of the revenue calculation. For the VAT purpose, you will charge the VAT on the advance. You may issue the tax invoice, but that will be not part of the revenue. Let's move to the next point. The first example, we're going to see that for the small business relief, company A is a UE resident. Person conduct real estate activity, real estate brokerage activity. Now here we mention the company, and he is doing the real estate brokerage activity. During his most recent, just let me see this Burhan Shahid. If our turnover in one tax period is less than 3 million and next tax period is exceeded 3 million, we can still elect the. Yes, see the first tax period is 24. If it's less than 3 million, you can go for the SBR. In 2025, you are exceeding the 3 million. Then you cannot opt for that. Okay. What is the condition? In current and the previous tax period, if 2025 is exceed, then you cannot opt. And in the following year also. We will see this example, you will understand this point. Okay. Which in the company A is a UE resident person conducting real estate brokerage activity. Real estate brokerage activity, he is buying on commission basis. He have the property from the developer and he's selling to the end clients and investors. And he's taking the his commission or incentive based on that. This our understanding purpose mostly is now in the market. If you've seen the real estate activity, real estate business or the construction industry or the new projects is coming. And coming means there is a huge investment in this sector. As most of these people I've seen from the Pakistan, that now we are familiar with the Malik Riaz Bahria town. So now the Bahria town, Malik Riaz also launched in the UAE also, the Bahria town in the Dubai South. He have the big size of the land and now he's announced the property, the society also. And maybe you are familiar in the Pakistan also, he's doing the campaign also for the same. Anyhow, the second, why I was mentioning this, because due to this, there are many brokerage agent or real estate agent, they are now taking the license in the Dubai South also, just to capture this. I met one of the gathering the person. He's a real estate brokerage agent. So he said more than 1,000 companies in the Dubai South or the agent is available to promote this campaign also. But anyhow, this is the in terms of Pakistan, I just explained. But on the other side, we have to we also knows the Pakistan visa also ban. Even the visa is not coming. Anyhow, this is the another discussion. Let's come back to the topic. Brokerage during its most recent tax period, company A had a brokerage revenue of 82.5 million. And the dividend of the 300K from UE company and dividend from UE company who already knows is exempt, is not taxable, and operating expenses are 2 million. So now here the important part we have to understand, because for SBR, we just now understand the calculating the SBR is available based on the revenue threshold. If revenue is 3 million, less than 3 million. So now what is the revenue? 2.5 million and plus 300K. 2.5K, 2.5 million plus 300K, it's coming 2.8 million. It's coming 2.8 million. So still less than 3 million, we can go for the small business relief. Here we are adding the 300K into the brokerage because we said even is exempt, but to have the threshold calculation, exempt income will be part of the revenue. So that's why it's coming 2.8 million. And the cost is not matter because we are checking the, we are verifying or testing the revenue threshold that is less than 3 million. As long as it's less than 3 million, he can offer, he's eligible for the small business relief election. The word will be the elect. He can eligible to elect the small business relief. This is the, the technical name or in terms of the taxation or in terms of the return also. Note, the cost and the profit are not relevant for the purpose of assessing whether company A is eligible for small business relief. Just for our understanding, we already understand this point. Let's move to the next. Now, the second example, the revenue in a previous tax period. Now, one of the participants asked this question, so let's see this. Mr. Y operate a licensed real estate sole establishment in Sharjah. Okay, he is a UAE resident person for corporate tax. His tax period ending on 31st December each year. But here he mentioned the sole establishment. In the tax period ending 31st December 2026, Mr. Y derived revenue of 1.8 million. And in the previous tax period, because now the revenue in the previous tax period, we have to make the test for that. In the current year, 2026, revenue is 1.9 million, and the revenue in the previous period, that is the 2025, is 4.3 million. So Mr. Y is not eligible to benefit for the small business relief in the period 2026. Why? Because the revenues exceed 3 million in the prior tax period, which means in 2025, he also cannot able to opt the small business relief because this is his first tax period. Again, the word is the tax period, not the accounting period. So once your revenue exceeds 3 million, then you're not able to opt for the small business relief. Okay, let's take another example. Determine the taxable income in the following example. Assume all the parties to be taxable person. Okay, let's Mr. G operate a business in a Fujairah and he's a UAE resident person. Okay, for the corporate tax purpose, his tax period end on 31st December each year. To date, Mr. G revenue has never exceeded the small business relief threshold for the 3 million per tax period. Mr. Here is mentioning, okay, 31st December is a year end for each tax period, and the G revenue never exceeds small business relief, that is 3 million. He's mentioning, giving us the information. In the most recent tax period ending, Mr. G generate revenue of 2.5 million. Now he's mentioning the previously is less than 3 million. Now in 2026, his revenue is 2.5 million. Because previously also less than 3 million, now in this year also less than 3 million, he will be eligible for the SPR. Eligible for SPR as his revenue for the tax period ending 31st December 26 does not exceed 3 million, consistent with the previous tax period. Again, the word tax period is important. The benefit from this relief, he must make an election. See the word previous tax period, why I'm emphasizing on that, because even while our study in the taxation training in the PwC also, people have the ambiguity. People not able to understand this point. Even the previous tax period is they are mentioning not the accounting profit. Even previous accounting period, the profit is more than, or revenue is more than 3 million. That doesn't matter. You have to calculate from the first tax period. That is, if revenue is not exceeding 3 million, you can offer the SPR. Let's move to the next. Carry forward unutilized tax losses when electing for small business relief. This is another example we already discussed during the topic. A GLC, a UAE resident company in a tax period 31st December. Now here I highlighted the 25. We have to focus. GLC revenue was 1.9 million. In which year? 2025. At the beginning of the tax period, G had unutilized tax losses of 400. Okay, now he's mentioning the tax losses, the 400K is there, but revenues are less than 3 million. In the prior year, GLC revenue did not exceed 3 million revenue threshold. GLC elected for the small business relief for tax period ending 31st December. Okay, we have the from the previous year, from 2024. We understand the tax losses is a 400 and the revenue is a 2025 is less than 3 million. So he's eligible for the SBR. Now we have to understand the next point in the next year, because now he's taking us to the next year, because he will give us the example carry forward unutilized tax losses. Here our understanding will be this part, carry forward unutilized tax losses. What is here unutilized tax losses is a 400K. This we understand at the beginning of the tax period, LCA had unutilized tax losses. This is our understanding. In the tax period 2026, G sold a factory to M for the 5 million, resulting in its revenue. The factory means this is the his business related item, the asset. So we'll calculate in the revenue. We will calculate as part of revenue. His revenue is exceeding 3 million as per the tax period small business relief. Small business relief eligibility threshold is exceed the eligibility threshold. Here, what he's saying, if made this 5 million, sold the factory, so definitely he's exceeding the 3 million, because the factory the asset will count under the revenue. Now, what is the solution for this? The point he want to explain the carry forward losses. Now, here we will understand the GLC carry forward tax losses cannot be utilized in 2025. Because in 2025 beginning, he have 400K unutilized tax losses. Now he's saying cannot be utilized. However, they can be carried forward and used in the future tax period where the small business relief is not elected, provided the relevant conditions are satisfied. Still, he's saying is not elected, but other conditions also need to be met. Other conditions also need to be met. Because in 2025, because we offer the SBR, so we cannot. Earlier, we seen this such exempt income or the carry forward losses we are not able to utilize. We may lose this. And you see the example here, 2025 we already seen. In 2026, he exceeds the 3 million, so he will not be eligible for the SBR in the tax period in 2026. He need to determine his taxable income for the December 2026. He have to prepare taxable income. He have to submit the complete tax return. Now it's not simplified return. If GLC has a positive taxable income, it can be utilized as carry forward losses of 400 from the prior exceeding period. Now here he's saying, he's just explaining, it's not full detailed understanding example. He's saying if GLC has a positive taxable income, if have the taxable income, so it can be utilized. Now he have the 400K, the losses, unutilized tax losses. But here again, the condition is there. So these losses we can adjust in current year tax against the taxable income. But here some limitation is there. 75% utilization restriction. Current year, the taxable income 75% or equivalent to 75% we can utilize in this year. And rest can be carried forward again. Any remaining taxable income exceeding 375 will be subject to 9%. So here we understand the 400K can be utilized. And second thing, we understand the 75%. The previous year losses, we can adjust against taxable income, but still one condition is there, that is a 75% utilization restriction. In down the line, we will see the detailed example of what is this 75%. And we will see the carry forward losses also. And let's move. The important point is to understand the key area that hope we already understand that part. So today, as of now, we still have almost 25 minutes. Let's the corporate tax. We can go through the part number 10, key concept of UAE Corporate Tax, income person tax period. So this is the main area where the corporate tax have to be, circle or rotate or move around. What is that? If there is an income, the people will pay the tax. If there is income, who will pay the tax? Who will be subject to tax and who will not be subject to tax? And on which period or on which basis he will pay the tax. These are the main or the backbone of the corporate tax calculation. Let's see the key area over here. Now, here we have to understand the corporate tax is a payable on taxable income. Corporate tax is payable on taxable income by taxable person according to tax period. In one line, we define the corporate tax. Corporate tax is payable on taxable income by taxable person. Our fight is that either our income is a taxable. The second fight is that either we are the taxable person or exempt person. So whole fight or whole the understanding or whole the complication to identify either our income is a taxable or not, taxable or exempt or out of scope, where we fall. Then the second, okay, if the income is a taxable, but are we a taxable person? According to tax period, we have to see on that also. Tax period is a 12-month accounting period as per the prescribed rate. The rate we already seen, but we'll see and again. Corporate tax, I'm just summarizing here, the corporate tax having the exempt income, taxable income calculated as per the accounting rule with plus and minus adjustment. We will coming down to the main area, the main understanding. Our onward topic will be very important and the critical, and our most of us are waiting for such area because that will directly you will link with the return also. Now the tax, then first we seen the income. What is our fight? We said the taxable income. We seen the taxable income and the exempt income. In our first session, we already gone through the taxable income and the exempt income also. Now the second fight is the taxable person. Who is the taxable person? We already seen some of the content or some of the important part. Now let's summarize in a more detailed version. So the person, the taxable person, we have, because taxable income, who will pay taxable person, but who is taxable person? Out of scope person are there, because out of scope, they are not following under the taxable criteria. Natural person without trade license or real estate. Natural person without trade license, we already go through detail this number of time. And the real estate income, personal investment income, salaries and wages also. Next, the family foundation, which are treated as a transparent. Family foundation is part of the exempt also, but here we are mentioning the transparent. Unincorporated, not subject to tax. UIP is unincorporated partnership we are referring here. The next is the FPE, foreign permanent establishment subject to election. We will PE is standalone, is a detailed topic, an interesting topic. PE mostly the foreign company who have the branch at different means they are operating in the UAE. So we will understand in that in detail also. First, we see the out of scope. Let's see the next person is a natural person. We already today have a lot of discussion on the natural person. Natural person will be resident and non-resident. Both we mentioned they are eligible to take the natural person relief, and SBR is also available to the natural person. Now we are seeing the exempt person. In the first session we have detailed discussion on the exempt person. Taxable person, we also go through the taxable person earlier also. Now again we are summarizing the resident person on the worldwide income and the non-resident person on UE source income. The UE source income itself is a broader definition. And here the resident on worldwide income is also broader definition. Whatever the income he's generating from the, not only UAE, from the worldwide, that also will be subject to corporate tax in the UAE. Now, earlier we seen the double tax treaty agreement. First, we have to calculate the taxable income. and see if we are paying more than 9% in the foreign country, we will take the foreign tax credit and adjust over there. So we will not get refund on that, but we have to do all this exercise. And we have to see the effective corporate tax rate calculation also. Let's move to the next. Now the last we said first, corporate tax is payable on taxable income by taxable person according to tax period. We already seen the detail this topic, taxable person as per accounting period, that is a 12-month, or the natural person in Gregorian calendar year, and the juridical person as per the memorandum of association or article. If limited partnership, it's already mentioned in the partnership contract. Key feature of UE corporate tax, taxable person, taxable income, tax losses, qualifying free zone. We already understand in the one by one this topic, and here is a summarized version for understanding and the for revision also, because now it onward we will go into the accounting adjustment part, but that on Sunday session that will start on that. Taxable person, we seen the legal entity. We already seen the incorporated in UAE, including free zone. Next, we see this is the new topic maybe for you. Effectively manage and control in UAE. That normally we call the point. Okay, effectively manage and control in UAE. What is that? Maybe your company is established in the Bahrain, but your top management, decision making, your board of directors, or the control of all the operation will be from the UAE. You are resident in the UAE, or you are running the business in the Bahrain or any other part of the world, but the decision making everything from the UAE. So then that also may fall under the corporate tax. That may fall as a taxable person. That is called the POEM, or effectively manage and control in the UAE. Then next is having the P in UAE. P normally we have the different kind of the P is there. Normally, if you for a common understanding, we just for understanding, maybe the operating through the branch, or maybe operating through the agent, or maybe through operating a different format that we will discuss in the P detail. Here, the important part for understanding purpose, you may link the if the company have the branch or they are operating from here. Okay, now the next point is the nexus. Nexus, if you have the real estate or the property in the UAE, what is that? The company maybe in any part of the world, or the Saudi or Qatar or Oman, they having the property here, and so that may fall under nexus. But again, this is just for understanding. I'm saying what is nexus. They may have the property they give on the rental, but they may have the property they kept for investment for purpose only, capital appreciation only. But we'll see in detail what is in excess and how it's taxable, because these are the detailed topic. We have to dive one by one on that. Natural person who conduct business or business activity in the UAE, that we already seen. In tax rate for the individual and juridical person, we already knows there is a taxable income. There is a tax slab on the taxable income. First 375 is zero rated, above 375 is a 9%. This is the tax rate. Okay, this is not a registration criteria like the VAT. Still, the people in the market, they are having the penalty because they are saying we did not met the threshold. Now qualifying free zone person, the qualifying income will be zero rated, and non-qualifying will be 9%. That do not meet the qualifying income condition. We will qualifying free zone standalone is a maybe 3 session, very detailed and interesting, and the people who have the interest in the free zone or working in the free zone, they will enjoy that part. Because that will be interesting, and they have the valuable insight. And this is my favorite area in terms of the qualifying free zone. Small business relief could be prescribed based on the revenue that we already seen today. Now we have to see the taxable income. Okay, the taxable income, accounting profit before tax as represented in the standalone financial statement with certain adjustment. As earlier today, I shown this last statement also, we will start our calculation profit before tax, profit before tax. Then we will see the some adjustment expenses not meeting the general test wholly exclusively, that is a capital. If we already deducted, we have to add back. Okay. The next expense is not meeting the specific test, loan, interest, entertainment. So we have to see accordingly and make the adjustment, because maybe as accounting, as per accounting, that expenses we already deducted, because in accounting we consider as the expense we minus, but for the tax purpose it's not expense. If it's not expense, if you already minus, you will add back. So same way, minus and plus income and loss from intra-group transfer, say minus and plus transfer pricing adjustment, minus and plus unrealized gain and losses subject to election, subject to election. This we seen today, the OCI. This have the correlation over here, the unrealized gain and losses. Because if we are not familiar with the OCI, other comprehensive income, and applicable, and which accounting standard, that important part, which accounting standard giving the impact in the OCI. So we have to dive into that and understand exempt income, participation exemption. If you have the investment in another organization, you buy the shares, more than 5% of his shareholding are the 4 million, and if you have the intent to keep the 12 months in terms of the dividend exemption, you have to keep the 12-month intention. If you receive the dividend, that will be considered exempt. I'm talking about the foreign participation exemption. Local dividend, we already seen it exempt. Anyhow, let's see the we'll go into the participation exemption. This will be one day session. Tax losses, tax loss transfer. Tax loss transfer, tax loss can be transferred between the group entity with subject to minimum 75% common shareholding. If we have the 75% common shareholding, then we can transfer the losses. Not the exempt person or the qualified person. If the person is already exempt, that he cannot take the benefit of the transfer losses. He cannot give and he can take also. The common shareholder, next is the qualifying free zone also, he will not take the benefit. Here, the next important part is same financial year or accounting period must be important. Now, the next part is the tax grouping. The tax grouping, mostly we have to give the application to the FTA before the relevant tax period. And if your tax period ending is the 31st December, before 31st December, end of 31st December 2024, you have to submit the application if you are meeting the condition. What is the condition? Parent entity hold directly or indirectly at least 95% of the share capital, plus he have the voting right, plus he have profit and net asset sharing. Okay. Have the same financial year, prepare the financial statement using the same accounting standard, and neither the parent or the company in the subsidiary is exempt or not the qualified free zone. If all these conditions are meeting, then we are eligible to take the benefit from the tax loss transfer between the group, where the common shareholding is the minimum 75%. But this in terms of the tax grouping, the minimum direct or indirect shareholding 95% plus voting right and the profit and loss. So there is a tax grouping is a different, tax loss group is a different. Please do not mix together. We have to understand separately. Tax grouping is a different concept or different understanding. Tax loss is a different understanding. Anyhow, let's move to the next. And qualifying free zone. What is the qualifying free zone? There is a certain condition they have to meet. What is the first condition? Maintain adequate substance in the UAE. Offshore companies, they will not meet the adequate substance. They will not take the benefit of the qualifying free zone. They will be subject to 9% corporate tax. Many people still maybe have the ambiguity. Offshore company will fall under the zero rated of the qualifying free zone person. No, as long as they're not able to maintain the adequate substance, so they will not take the benefit of the zero rated corporate tax. Now, next, all the condition It's not only one condition, all the conditions consecutively or simultaneously need to be met. Drive qualifying income. Drive qualifying income. Maintain adequate substance. What is the adequate substance? I'll just give you the example. If the company is having the business inside free zone, the trading business, so he must have the warehouse also where they will store their goods. And he have the appropriate team like that sales team or like the store team, like the accounts team, like the other required, the basic or the main key functional personnel must be available inside the free zone. Again, the qualifying free zone person definition is additional part that will not go into that. But this is even if the qualifying free zone person do not have adequate substance inside the free zone, so he cannot take that one benefit. Now, drive qualifying income through the qualifying activity, comply with transfer pricing, not elect to city standard rate is 39%. Anyhow, let's move to the next. Taxable income. Tax losses set off up to 75% of the taxable income for the tax period. 75% of the taxable income for the tax period. Just in the previous example, we've seen they put the limitation of the 75%. He's saying this year, whatever the taxable income, take the 75% up to that amount. Previous year losses can be adjusted, and still, if you have the losses, that you can carry forward. Remaining carry forward. Losses not eligible. Losses incurred before commencement of UAE city law, before 1st June 2023, if any losses that you cannot take the benefit. Before a person become a taxable person, if you're not registered for the city, we cannot avail the benefit. Losses incurred from the exempt asset or the activity, we cannot utilize that. 50% ownership interest not satisfied in the same business carried out after the change in the ownership. Here, if the business is sold by one company to another company, if saying the ownership is changed more than 50%. If ownership is changed, then the previous losses cannot be utilized in the future year. This is one of the detailed topic where they put this condition as part of the GAR rule, because maybe the business who's profitable, there is another entity who's a loss making, huge losses are there. Who will buy the loss making company? Who will buy? Nobody interested. But to take the advantage of the tax, the people work on in a way, they buy such companies and they use their losses to adjust against the tax liability or taxable income. Just for understanding, but again, this is fall under the GAR rule. But the FTA or the OECD guideline, they have certain guidelines. They said it will not change 50% ownership, but there is other condition also we'll see in detail also. Transfer and the restructuring. Tax relief on intra-group transfer, maybe asset or liabilities between the intra-group. So here we will see the qualifying group 75% common shareholding. So this here we are checking the tax transfer losses. These are different, transfer and restructuring are different. Tax group is a different, tax loss transfer group are different, tax restructuring are the different. So we will understand all this. Tax transfer relief on merge spin-off, where the business is transferred in exchange of shares or other. So recently the Facebook buy the WhatsApp. So what they did, they said, okay, whoever had the previous WhatsApp shares, please, you can return the WhatsApp share and you can take the Facebook share. Just Google, you may be familiar, this one of the biggest, I think, this the high-tech technology deal, I think the last year or isn't they made. So you can understand this concept transfer and restructuring, because Facebook buy the WhatsApp and now they're saying that whoever they have the share of the WhatsApp, you can return and take the Facebook shares. And thank you guys for today's session and for your interest. Hope this session will be valuable for you guys and you keep the focus on that. Now, there is a few questions. If you have more questions, so we'll take the 5 minutes to question and answer session. Here the one question, bad debts, written off, interest income, whether is it interest, okay, the interest income and the interest expense, together it will be called net interest. If you have the expense and income, we have to net off. And the interest capping rule is a detailed concept we will understand over there, this part. The bad debts, again, the bad debts written off, you have to follow the IFRS. As per IFRS, what are the treatment for that? And you can proceed as per the IFRS. See, now before 2023, this is the reason FTA in the first tax return, they will take the opening balances. So they will make the cutoff. Whatever the effect of the previous year, it will not affect in the future year of taxable income or taxable line items. So the FTA in the first tax return, they will ask you what is the opening balances. You have any item that may impact in the future in terms of the unrealized gain and losses and the bad debts. These are the two common examples of that. So if you want to understand that part, so we will in future down the line, we will understand in detail topic. How to apply for SBR. This is, as I already mentioned, during the first return, while you go for the return, you will, the first option will be there, your revenue. If revenue is less than 3 million, then the next option will be a pair SBR. You just tick the SBR relief. For LPF, whether every business of sole establishment person take into consideration. As we already mentioned, the sole establishment is for part of the natural person. Okay, yes. And even the natural person, you have to calculate all the income and you have to consolidate. Even you have 5, 10 sole establishment under the natural person, you have to consolidate all the revenue. That will be total revenue in terms of the natural relief also and in terms of sole SPR also. Any other question? Yes, Sayed, I'll make you the admin. So please take care from that. Any, there is another point. Let me. If the group of, let me, what is this? Okay. If the group of companies having the mainland as well as qualified free zone company, then they will be considered consolidated revenue. No qualified free zone person cannot be part of the group. As I already mentioned very briefly on that, qualified free zone person cannot be part of the any group calculation. So if you want to make the group calculation and the group consolidation for the see, in terms of the accounting purpose, you can opt, but in terms of the tax we are discussing, you cannot make the consolidation for the tax purpose. Penalty above 3 million, but include the salaries. Penalty above 3 million, but include the salaries at arm's length for the director manager who are the shareholder will be allowable. This we discussed in the first session. If LLC company and they are on arm's length is the allowable expenses subject to the ALP rule. But if the natural person and sole establishment, then is not deductible expenses. All this director shareholders in terms of the natural person, such whatever the salary you pay to the owner, shareholder, director are there. Connected person, it will not be deductible. But in terms of the LLC or juridical person, the juridical person have 2-3 types. Yes, it will be deductible. Will be opening bracket reversal be taxable or not? Yes, I already mentioned in the return you have to give this information. In future, it will have the impact on. Okay, guys, thank you very much for today, your participation. So we'll meet on the Sunday.